Hello there everybody, a very good morning to you all and welcome back to HowToTrade.com and welcome back to another live stream here on our YouTube channel, our Facebook, our LinkedIn and our X channels as well. There's no introduction needed. This is I was thinking about what to say before I come on, but the market speaks for itself today. This for me, and I might be over exaggerating. Tell me if you think I am. I think this could be the biggest day in the markets this year, and potentially over the last, probably since COVID, and even maybe before that. That's how important I think today is in the markets. Why? Because the FOMC, the Federal Reserve, will be delivering its next interest rate decision, and it's not going to be an interest rate decision that we're used to. It's a new era of policy, and the Fed are going to be cutting interest rates. But by how much? That is the debate. I am not quite sure how much. To be honest, I've wrapped around my head the case for a 25 basis point cut. I've wrapped around my head the case for a 50 basis point rate cut. And I've come to the conclusion that I'm probably about 60% in the camp for a 25 and 40% in the case for a 50. It is completely like on the table. All options are on the table, and that's why I think we're going to see such an explosion in volatility when that news event comes out. So I want to come on today to obviously preview that decision, give you my opinion on where I think the Fed are going to, what I think the Fed are going to do, and what I think that potential impact of what they do will have on, the main markets. Stock market in particular, gold, the dollar index, for example, the dollar related pairs, should we say. So I'll give the scenario on both occasions on whether they get whether we get 25 or 50. I'll give you a scenario for both on all the charts that we go through today. If anyone's a little bit confused or a little bit nervous, or a little, because I'm actually a little bit nervous today, or a little bit worried about what to expect and not sure what to expect, or have any questions in general about what is going on today, then feel free to drop that in any of the chat rooms, and I'll be more than happy to answer those questions for you. Good morning to you, Anna. Good to see you. And Dillaby, good morning. I am doing well. I am very excited for the day ahead. Martin174, I hope you're doing well. Good morning to you. Good morning to you, Clone, as well. Hello to you, Jerry. Good to see you. Good to see you, handsome face. Thank you very much. I've had a question come through already, which is good. Machine X, good morning to you. Do you think USD pairs will position themselves on the opposite side before the news at 7 p.m. for 7 p.m. UK time to then rally? Potentially. You may get, to be honest, I'm not sure that will happen. So basically what you're trying to say is, do you think that basically we'll get the opposite move before the event, and then we get, the opposite move as the event comes out? That does happen. I don't think it's manipulated really, to be honest, in that way. I just think what will happen today is that there'll be a lot of people sitting on the fence in the lead up to the event, and there might be people taking out positions, adding positions. There'll be a lot of action in both ways today, so you may get people who are deciding to, take some positions off, and therefore you may get sort of random volatility spikes throughout the day. I'm not sure you're going to get any clear direction. That is a possibility, Machine X. Do I think it will happen? I don't know. I actually don't know. It could happen, yeah. It could happen, to be honest. I wouldn't bank on that happening, though, is what I'm trying to say. How Matt, hello to you. Good morning to you, and I hope you're doing well, and thank you very much for tuning in. Abdullah on our Facebook channel, good morning to you, and I hope you're doing well as well, and thank you very much for the message this morning. In the chat section, drop your predictions in there now. Who thinks 25 and who thinks 50? Drop either the number 25 or 50 in the chat room now. I want to see what you think the Federal Reserve are going to do today. Do you think they're going to cut 50 basis points or 0.5%, or 25 basis points and 0.25%? I'll remember it if you get it right, so drop it in there, and we'll go through it at the end to see who's gone for what. Right, okay. I've just spent as well all morning. I've not even eaten. All I've had is a drink of water. I've not even had my coffee yet. I've spent all morning writing up a massive market analysis article in preview for today. It's going to be posted on our website. It's an article based on the stock market. And I'm going to put that on. It's going to be on the website, and I'm going to put one of the trade ideas or one of the charts in the market analysis section in the trading room. But make sure you tune in, or make sure you look out for the market analysis website. Because in about an hour's time, I will put I'll put that article out, and the title of it is "The Stock Market to Go Crazy on an Historic Fed Day." So I've got analysis on the case for 25, the case for 50. The Dow Jones prediction, the Nasdaq prediction, and also the S&P 500 prediction as well. So make sure you tune into that one, okay? Right then, where do we start? We've got some predictions coming through. Keep those predictions coming in. I want to know if you think 25 or 50 or 0.25 or 0.5. What do you think the Fed are going to cut? Let's start with some interesting piece of research that I conducted yesterday, purely off my own back, right? I'm just on an economic calendar. If you look at the last time, if I zoom in on this, can you see that? Hopefully you can see that, right? These are all the interest rate decisions that the Federal Reserve have done over, when they've had their meetings, basically. And what you can see is I'm scrolling. Still scrolling. Why am I still scrolling? The last time the Federal Reserve cut rates more than what the markets were forecasting on this calendar, or in calendars in general, the last time that happened was in December 2008, when their interest rates were at 1%, and they cut 75 basis points to 0.25% in a bit of an emergency matter. We know what happened in 2008, the Great Recession. But what happened before the Great Recession? Well, look, interest rates were at 5.25%. September the 18th, 2007. What's the date today? September the 18th, 2024. September the 18th, 2007, the Federal Reserve cut rates by 50 basis points from 5.25% down to 4.75%. The current interest rate in the US is 5.5. Now, I'm not here to say that, because of what happened in 2007, that's going to happen now. It was a different time. They didn't expect the recession to come, but essentially it was a similar sort of thing. Inflation pressures were falling, and they didn't want rates to be too restrictive because they didn't want to break the economy. And I'm thinking at the time, they didn't know what would happen the following year when those rate cuts essentially caused the housing bubble to burst, bank runs, the Great Recession, everything fell, everything crumbled. And it started with this. And it was because rates were obviously high in the lead up to it to combat high inflation. It's what they have to do. But the fact is, high interest rates cripple the economy. And the timing of when you cut them is perfect. It has to be perfect in order to not see drags on the economy. So, when you fast forward to today, a 50 basis point rate cut, what would that look like for the markets? Well, would it spell, or would it signal to us, or signal to traders and investors, that the Federal Reserve are behind the curve, and that actually there is a slowdown coming in the next 6 to 12 months? There's a big slowdown coming because rates have been so high, because they've had to be because of inflation. And is there a big economic slowdown coming? It's definitely a possibility. And if they cut 50 basis points a day, it begs the question, do they know something we don't? And is the underlying data weaker than we think? And is their economic forecast or economic projections showing weakness? They're not going to come out and say there's going to be a recession. If you go to that 2008 statement, which I found, a 2007 statement, let's read it. The Federal Open Market FOMC decided to lower its target for the federal funds rate by 50 basis points to 4.75%. Economic growth was moderate during the first half of the year, but the tightening of credit conditions has the potential to intensify the housing correction and to restrain economic growth more generally. Today, action is intended to help forestall some of the adverse effects on the broader economy that might otherwise arise from the disruptions in financial markets and to promote moderate growth over time. We know that they didn't promote moderate growth over time. Readings on core inflation have improved modestly this year, just like it has done now. However, the committee judges that some inflation risks still remain, like it does today, and it will continue to monitor inflation developments carefully. Does that not feel like a similar sort of statement as what we could get? And obviously not talking potentially about the housing correction or anything like that, but about the adverse effects that we could be seeing on the economy if rates are kept too restrictive for too long. That sort of makes me feel like there could be a 50 basis point rate cut today, but I'm just worried about what sort of message that would send to the markets. And so Harry just put in there conservative cut 0.25 to avoid wild volatility, and that's the sort of point that I've just made there. I wouldn't say Powell someone who takes that sort of risk, but then, and I will be answering these questions that are coming through, by the way, keep them coming, I want to know what you think. Okay, it says, please, what's the Fed rate dropping in Nigerian time? And what's the possible scenario for XAU USD? What's the Nigerian time now? Oh, so it's same time. So it's dropping at 7 p.m. Okay, it's dropping at 7 p.m. your time. And a possible scenario for gold, we will go through that as well. Keep those predictions coming in. What do you think we'll see today? 25 or 50 basis points? It really is, on all options on the table. It really is going to be interesting. Okay, so that's my little bit of research that I wanted to show you that I found over the last. I was looking for doing it last night, to be honest with you. Let me just go back and then talk about potentially the case for a 25 basis point rate cut, or the case for either, really. If we look at the CME FedWatch tool, according to this tool, and it's quite accurate, there's a 61% chance that the Fed are going to cut 50 basis points and a 39% chance that the Fed are going to cut 25 basis points. It is quite rare that you see both options on the table like that, a near on 50-50 split, 60-40 split. It's quite rare you see that heading into today, and that's why I think it's such a huge day in the markets. Because of that, because of the fact we don't know, and because of the fact that it's going to be the time where the Federal Reserve ease its monetary policy and start to cut back on interest rates, which spells a new era in policy, and that new shift into policy causes market moves, right? That's just the fact. The facts are as well, if you look at the, where is it? And this is all, everything I'm about to say is in my article as well. I was looking at the jobs market, right? It's now a battle of, are the risks to higher inflation the same or higher than the risks to the economy? And when we talk about the economy, the housing sector is obviously the most important. But right now, the spotlight is on the jobs market, the US labour market. As you can see, over the past sort of 12 months or so, this has been the non-farm payroll figure. And the Fed will look at this to determine, as well as inflation, to determine their decision. And you can see that throughout January 2023 and most of 2023, the jobs numbers had come in higher than forecasted, and pretty much the same for 2024 as well. But those numbers have been falling over the last couple of months. We've seen 175, we've seen 114, we've seen 89. More importantly than anything else, if you look at these previous figures, you see they're in red. That's basically where the forecast had come out, and then the following month they revised that figure down. There's two problems with that. One, it's now put into question the actual validity of the report itself and the forecasting tools that the Fed has. because every single time we get a non-farm employment number, it seems to be that the following month that number gets revised down. So how can we believe it anymore? Shane has a real problem with that if you talk to him about it. Secondly, they're downward revisions, which is telling us that the labour market in the US is, although still adding jobs, is falling in terms of its strength. Slowly, but it's falling. More importantly, the unemployment rate. If you look at when the Fed started hiking interest rates, unemployment was at sort of 3.5%. It's now at 4.3%. You read a lot of economic models, and that tells you that if unemployment rises by 0.5% or more during a hiking cycle, there's a fairly strong chance that that economy will enter some sort of recession, where it's increased 0.7%. Again, more signs of slowing down in the labour market. If you look at inflation, because this is the other side of the coin, if you look at inflation, you can see that inflation is at I can never find the actual thing. I do apologise. I've gone the wrong way. CPI. If you look at the headline figure in that CPI, it has fallen from 6.5%, 7%, 8%, 9%, which is massive inflation. The policy that the Fed has adopted has brought inflation down to 2.5%, and they're comfortable with a range between 2 and 3%. So there's a 2.5% inflation rate, but a 5.5% interest rate. That gap is very, very restrictive. People would say that's unnecessarily restrictive. But the core CPI did tick higher last month. So you can see that there's a lot of contradicting pieces of data, and that's why today's print is a really tricky one to try and sort of predict as such. But I'm leaning towards 25 basis points because of what Harry just said, and that's I'm not sure they'll want to cause such a big stir. Anyway, as you can see, I'm very interested in that. Right, let's go through some of your predictions then. Anna has said 25. Abdullah has said 25. Clive Harrison, good morning. Trend Rider all the way. Nice. Thank you very much. Good stuff there. The CME is quite accurate, Matthew. It is quite accurate. I'm going to show you what's different for us between 0.25 and 0.5 in just a second. Clone says 50. Martin says 25. Marcin says 25. Jorge says 25. Harry says 25. You're all going against what the CME FedWatch tool is saying, and what a lot of analysts are coming out and saying today. So we shall see. We shall see indeed. Who else has anyone else got any predictions for me? Halmat says 20.25 as well. Okay. Before I just move on, I want to tell you that in that September 2007 50 basis point cut, the stock market, the Dow Jones and the S&P 500, they finished something like 3.5% to 4% higher off the back of the release on that day, which shows you what could happen today should the Federal Reserve decide to front load their interest rate cuts, which basically means cut more at the start and then get more incremental towards the end. Actually, just before I go on the charts, what did they do when they hiked rates? Did they front load hiking, or did they hike slowly? No, they front loaded. Look, when they hiked rates, look what they done. When obviously rates were here, they went from 0.25 to 0.5. That was their first hike. So that's a sign. And then they went 50, 75, 75, 75, 75, 50, then 25. The reason they had to do that was because they were behind the curve, is what I'm trying to say. And therefore, does that open up the opportunity of, well, they don't want to be behind the curve again? Will their arrogance prove? Will they do the same thing and not let the economic downturn get out of control and cut rates quicker or more quickly, not quicker, by 50 basis points, which is a higher rate cut, rather than cut incrementally? and just front load those cuts to start off with and sort of squash any idea. That's what the markets want today. That is what they're looking for. And we shall see if they do get that. Right, so my base case for today, everybody, is that if we see a 50 basis point rate cut, then I expect euphoric trading in the stock market. I expect, and this is what I expect immediately after the release, okay? Because I think that a 50 basis point rate cut will just be unbelievable news for the stock market, initially for the stock market, and I think we'll see a surge in the S&P 500, the Nasdaq, and the Dow Jones. And I've put some levels in there that I think we could hit should we get that cut. However, I'll be cautious as well if we do get that 50 basis point rate cut in the medium term, because again, what is it? It says to me that the Fed are potentially behind the curve when it comes to the economic downturn, and therefore it almost feels like they're needing to cut. By the way, how Powell speaks as well is really, really important. Shane will cover all of that when he covers the event live. He'll cover the press conference and what Powell's saying and whether he's dovish and and all that sort of stuff. If he's dovish in the sense of we're worried about the risk to the economy, blah 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 blah, that won't really be a good thing for the stock market. But should they cut 50 because they're happy about inflation and they think interest rates are too restrictive and they want to be more, all that sort of thing, boom. I expect the S&P 500 to come and trade way above 5,700 and continue its march. Just printed a new all-time high yesterday. Should we get 25 basis points, I think that will be seen as a bit of a disappointment from from traders and investors. It's still a cut, and I'm not saying it will turn bearish in the stock market by any stretch, but we may see a move down, and it's probably a little bit of a stretch to get this far, but maybe a move down to the next support area, which is here at 5,500 on the S&P 500. And this is the basis of my article, by the way, so you're getting a sneak preview. The Nasdaq. The Nasdaq is lagging behind all of the other indexes. You can see where the all-time high is in the Nasdaq at 20,750, and we're trading down at 19,450, which means that it needs to play catch-up. And it tells us as well is that there are concerns that there's a little bit of a tech bubble. In 2007 and 2008, there was a housing bubble. Is there now a tech bubble? That's the question, right? I'm not telling you whether there is or not. I'm saying that's the question. That could be why we're seeing the Nasdaq lag a little bit, right? However, same sort of thing. If we get 50 basis points today, I think the Nasdaq will make a move up to 20,000. I think it will take out all of these equal highs at liquidity and see a move up to 20,000. Should we get 25 basis points, then I believe that we may see a move down to 19,000 in the Nasdaq. Because again, I think it will be treated as disappointment, even though it's probably sensible. It should also be worth saying that there is a case here where we get 25 basis points, but the stock market still rallies. And that would be if the Federal Reserve plan or basically say that there's more cuts coming. And they signal that there's a lot more cuts coming, and they're quite dovish in their tone. And that would be what I call a dovish 25 basis points rather than a hawkish 25 basis points. So I have to say that immediately off the back of the release, I do point towards stock market strength rather than stock market weakness in the short term. The Dow Jones, again, at all-time highs, printed a new all-time high this week. If we get 50, I expect to move up to around 42,000. Should we get a 25 hawkish cut, then we could see a move down towards this fair value gap, which sits at 41,224. Now then, so I would have to say that I'm 75% confident that we should see some stock market strength. The only way we wouldn't see stock market strength across when the whole day is finished and heading into tomorrow is if we got a hawkish 25 cut. If you look at the dollar index, I haven't actually marked these things yet. Here we go. If we were to get 50 basis points or a dovish 25 basis points, I think there will be some dollar weakness down towards, and I still think that 100 could be met. I think regardless of what happens today, I think it's a sign of a new shift in policy, and I think the Fed are going to be cutting rates fairly aggressively over the next few months. If they don't, I'm worried about what's going to be happening to the economy and what's happening to the jobs market, and then they may be forced to. None of those scenarios seem positive for the US dollar for me personally. And although that we may see, if we got a 25 basis point cut today, then we could definitely see the dollar index move up towards 101.2, and basically see this as maybe sort of a triple bottom, and then potentially we may see some dollar strength over the next few weeks because it is overextended to the downside. The way you'd sort of marry that up for me is, I'm looking at euro dollar. There's a potential trend rider opportunity. You can see that nice test. There wasn't quite a 30 pip gap, unfortunately. Yesterday we was quite unlucky with our H4 cable trend rider, because we entered here with a stop loss at this low, and you can see we just survived. Did anyone get stopped out of this? Because we should have just survived, and we're now actually in profit. So again, weaker dollar, pound dollar upside. If we get that sort of 50 cut or that dovish 25 cut, then we're probably going to see a move up towards 327, which is basically that previous high from August, and then continuation. However, if we do see more of a hawkish Federal Reserve today, then we're probably going to see cable sort of come down below at least this wick here, and probably down towards sort of 1.3 could be a good target if we do get that. It'd be a similar. Oh, sorry, Dilbert. Did it be? I wasn't sure if you did or not. Okay, that's fine. We move on. The one I'm really looking forward to trading is gold, because I think if we get a 25 basis point cut today, I think gold may initially fall down towards my massively key level at 2530, the previous high, the previous bearish order block, a daily bullish order block, and 50% of the FVG, all at 2530. And I think that what we may see is if we get 25, we may get that, because I'd still be bullish on gold. That wouldn't change, in my opinion. 50 basis points, well, if we get 50 basis points, then it's probably not going to be much more downside left in gold, and we'll probably come up and at least come and take out 2590, and maybe even come up to 2600. Okay. Right. I've just answered that on gold. Anyone else got any other questions they want me to run through? Anyone got any other predictions on what they think might happen today? What's your favourite market to trade? What are you expecting to happen? Yeah, let me know what you think. If not, I'll end the stream there. We've done a really nice preview of the event. The talking is done for me. I've put my predictions in. I've put my cases forward. I've done a massive analysis article. I've done a stream. I've broken down everything I possibly can into what I think may happen. I'm leaning towards 25 basis points. But I've also got a sort of sneaky feeling that we may see 50 because of the Federal Reserve's favoritism towards sort of front loading things at the start and then incrementally keeping them there and keeping them there for a while. A couple of questions coming in. Have a look at USD yen, also at oil. USD yen is a similar sort of thing for me. Actually, USD yen has just traded into a really nice area of resistance at 142. You can see that we hit my 140 target, and I said that once we hit 140, I'm going to sit and wait for the market to take shape. You can see we had a nice pop yesterday. If we get that 50 basis points again, then I think we'll sink dollar yen if we get 50 basis points. I really do. Down below 140, a daily closure below 140. But 25 basis points, I wouldn't probably look to play dollar yen long side. I'd rather play the long dollar against another currency like the Canadian dollar or something, or the pound or the euro, because I think that we've still got a divergence of policies here, Dillaby. So we've still got a more dovish Fed coupled with a more hawkish Bank of Japan, and so I wouldn't play dollar yen upside. I'll just play the downside if we got 50. If you see what I mean. Hope that made sense. And in terms of oil, my analysis for oil remains the same, and that's that basically we've got this daily fib, and I want to see a move up to 72. How could we see a move up to 72? Well, we'd need to see a 50 basis point or dovish 25 basis point rate cut. I'm not sure how much effect it's truly going to have on oil compared to the other markets anyway. But you can see at the moment, if you're looking to sell oil, we have been in a good area at that 38.2, right at that 70 level. So we might see something that looks like that today if we really do get a more hawkish Federal Reserve. I'm just trying to think. I think when it comes to oil, it's going to depend on how Fed communicates to the markets. If he shows concern about the economy and the effects of what he's doing on the economy, then that will sort of dampen the demand prospects for oil in the future, and therefore we'd see oil prices lower. But if he says about how resilient the US economy is and we don't need to go too hard, blah blah blah, blah, then that's positive for oil, and we could see that move then up to 73. That's my view. I'm in the opinion of on 2.25 cuts to ease things in and not create chaos as was done in the past. Yeah, I do lean towards that opinion. I really do. To be fair, Harry says your explanation of front loading makes sense, pointing to the fact that the Fed actually wants reaction. That's 0.5. Yeah, they front loaded when they hiked rates. Although that very first hike, wasn't a big one. It was a 25 one. But you can see how aggressively they went after that. Okay. Similar sort of thing, Jerry, in terms of crypto. If we were to get a higher rate cut, i.e. a 50 basis point rate cut, that will probably be seen as positive for risk assets, and crypto would probably see a rally as a result of that. Clone, what's my view on pound versus the Japanese yen? I'm not too interested in buying that pair, to be honest, because I think I had a look at it the other day and I'm not really sure. Sorry, let me just... In fairness, you can see that this is a similar area to what we've got on dollar yen. So if you're going to sell yens, it's not a bad bet to do it against the pound. But what we need to see, Clone, is we need to see a break above this supply zone here. We could then use that and get maybe our next order block area, which could be coming from here. Okay. Potentially a demand zone if it breaks this resistance. And then we could use that to go higher. And that would be playing if the Bank of Japan were a bit more dovish, and they sort of, didn't really hint at many more hikes to come, and it was all a bit overblown. There would be some yen weakness as a result of that, and we could see something like that. Okay, everybody, that was your breakdown for the Fed. I hope I've managed to preview that in a simple to understand as much as possible, but also in a way that is easy for you to understand, and hopefully gets you some nice ideas of what to expect in the markets today. My overriding thing is, and I don't want to sit on the fence, and that is that, as you can see, there is a strong case for both sides. It's going to be split by maybe a couple of FOMC members. It's going to be a close call no matter what, and therefore we do need to be careful trading today. If you do manage to get into some profit before the event, me personally, I'd try and move my stop loss to my entry level just in case I'm on the wrong side of the news. If you get on the right side of the news today, I imagine that you're going to make a lot of money, but you also will lose a lot if you're on the wrong side and you're not protected. So make sure that you are. Thank you very much for tuning in. Good luck to those trading. I'm going to be in the room when Shane is on stream, because I want to watch that stream for obvious reasons. So I'll see you later on. It's going to be a long day for me, and I will be replying to the messages. Should anyone have any, just drop me a message and I will answer them for you. Okay? Take care, everybody. Thank you very much, and good luck. Thank you.